Hello everyone and welcome to this weekly technical outlook here at excel.com. This week is including the UK CPI and Japanese CPI and GDP from China. So looking from UK first, inflation dropped to 3.4% in February and predict that it will fall to 3.1% in March. Now looking at the chart, we can see that the market is recovering some of its losses that posted on Friday, and it penetrated this long-term trading range to the downside and also beneath the 1.2495 level. After the price, it dropped towards the 1.2425, is recovering some ground with the next resistance coming from this area here of 1.2495 to 1.2520. While a climb higher, it could meet the 200 DSMA around 1.2775. That will also take the market back within this consolidation area. Even higher, the 3-day SMA around the 1.26 and the 50-day SMA near the 1.2670 resistance may halt upside movements. On the other hand, now a slip beneath the 1.2370 support level, then it will change the outlook to a more bearish one. Now looking at the technical oscillators, the MACD is holding beneath its trigger line in the negative region, while the stochastic is pointing slightly up in the oversold area, suggesting that we may see some more recovery. Now turning to the Japanese CPI data, on Friday is expected to fall to 2.6% from 2.8%, and we can see now that dollar yen is creating another new high around the 153.95 level, and which is a new 34-year high. Even higher, traders need to be cautious around the next psychological numbers such as 154 and 155 until the 161.8% Fibonacci extension level at 159.18 taken from this down leg here from 151.95 to 140.20. However, any downside movements, it may found some support near the 3-day SMA of 151.95 ahead of these bottoms here of 150.87 and the 50-day SMA near 150.40, which is also near this ascending trend line. So any movements beneath this diagonal line and also even lower beneath the 200-day SMA, which is standing at 147.50, then it may change the outlook to a more neutral one. Now the RSI is pointing up in the overbought area, suggesting that we may see some more gains. However, the stochastic is creating a bearish crossover within its percentage K and percentage D lines, indicating that the market is within an overstretched territory and we may have some bearish corrections. Now moving to China, it will release its GDP figures on Tuesday. The annual rate is forecast to have dropped from 5.2% to 4.6%. Aussie dollar is moving within this sideways channel since mid of January, with mid-level around these SMAs here. So any movements above these SMAs, then it may reach again the upper boundary of the range of 0.6635 and even higher the 0.6665. Now when it can jump above this level here, then it may switch the outlook to a more positive one in the short-term time frame, meeting the 0.6730. On the other hand, a move beneath the 0.6440, it will take the market until the 0.6340 support. The MACD is moving sideways beneath its trigger and zero lines, while the RSI is moving slightly up beneath the neutral threshold of 50. So that's all from me. Thank you for watching and have a great day.